Hey guys, how's it going? Welcome to the video. I figured I'd throw in some charts here. I got a few tickers here that I wanna show you guys, just to show you how breakouts work and what we're looking at, what we want to be searching for, and why these breakouts, why they give you a nice risk reward potential. Let's uh, let's look at this first ticker here. Rigetti Computer. Quantum computing name that's been very popular in the last few months. Came off the high here, but that's not what this is about. We're going to look at the breakout here through a trend line here, as you can see in orange. As you can see, for quite some time during the summer, the price was just chopping. It wasn't really going anywhere. It was in a range. This is a very volatile stock with an ADR, average daily range, of above 13%. So these are quite kind of small moves here that they're making. The stock is between 17 and 14. So that's a small range for a stock that's that volatile. So it doesn't really do much, and then suddenly it starts setting up above the 10 and 20 day, which is what these blue lines are. 10 and 20 day exponential moving average is what I use. And then suddenly you start seeing these green candles here. But not only that, you see the volume here. These brighter green bars are above average volume, right? You see this green bar here, these two green, they're uh, they're not very bright. That's below average volume. So these are all above average volume, a lot of them. And you can see these green bars and green, 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 and this technical breakout. So this is what we want to be looking at. We will be getting in like around here. We'd be putting our stop either like below the orange line or somewhere. If it's a little bit tighter than this, we can put it below the 10 and 20 day. So this is kind of what we're looking for here. Stocks that are like building energy, stocks that are supposed to be volatile but are not at that point, and they're just going sideways, and they're like biding their time. They're saving up their energy, and then suddenly it's a burst, and it goes from 18 to 34, and a lot higher even. So it's like it doubles in very few trading days. That's the kind of stuff we want to be looking at. We don't want to be caught in this chop here. We want to be involved when it breaks out, and we want to be alongside the big money here. And we can see that the big money is buying here. They're buying above average pretty much session after session here for pretty much in the latter half of September and the entire month of or the first half of October. Skyrocketing price and a lot higher volume. So that's but not only that, guys, look at the 10-day here, how the price stays above it and how it tests it here. It's short-term or overbought, or whatever you want to call it, extended. It pulls back and it pulls back here perfectly into the 10-day, and it rockets again. Low of day here again, that 10-day, and it departs again from the station. Then you can, once you start seeing these bigger red bars here and failure to go higher, that's a warning sign, and you start seeing these red bars, that this thing is tired and maybe it's time to take the gains, spectacular gains I might add, and go somewhere else. And also the 10 and 20 day can really help you with that. You can if it's really strong, it's been surfing at 10-day, it seems to be valid here. You can sell it if it closed below the 10-day. I wouldn't fault you for it. Or you can close it to position if it closes below the 20-day here, below the blue line below. It's also a valid strategy. So that's a nice breakout. Let's look at another chart here. PSIX. And this one here, you can see there's a fake breakout, which is why we also want to be looking at closing prices, because sometimes what you're gonna get is intraday volatility, and you're gonna be like, oh, look at this thing, it's breaking out, and then suddenly a lot of selling comes in, and you're still below that trend line here. So once this does break out and starts riding the 10 and 20 day, you start getting a little bit more upward momentum. It's when you start paying attention also above average volume here. And most of all, the biggest lesson here, I suppose, is look at the 10-day, guys. Look at the 10-day. I mean, just like this is like chart porn. Look at this, how it touches it here, 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 and how it just keeps riding it, surfing it. And then here it goes below it once, close below, but 20-day comes into action and it goes back up here again. So you can tell this 10 and 20-day moving average strategy, it's just nice for riding the wave, and you don't have to overthink when you want to get in and you want to get out, because the 10 and 20-day, it tells you when the trend is getting tired. You can tell here it's going sideways a lot. You get that giant pop up, very extended, and then it corrects and starts here. It closes below the 20-day. You get out, and from then on, it's done nothing, right? So let the 10 and 20-day guide you. It's very important. It's really a cornerstone of our service here. Another one, also a strong technical breakout here, a fake out, and you can tell here suddenly this volatility is very diminished, and then it starts riding the 10 and 20-day as it breaks out. Green candle, green candle, green candle, green candle. It squeezes upward after a long time of consolidation, biding its energy. And of course, what we didn't see before, you look at this, very low volume, then suddenly highest volume of the quarter, followed by the highest volume of the year. All very bright green bars, guys. This is what's causing the price to appreciate so rapidly. A lot of people buying that technical breakout. You don't want to be caught in this low volume sideways chop here. You want to be present when it starts to squeeze higher, and then use that 10-day. If it's a real strong stock, it's soon close or below the 10-day moving average, and most certainly not below the 20-day. So that's another one that where you can see, just if you look at price patterns, you look for these breakouts, you look for the volume, you ride the 10 and 20-day and use it to tell you when to get in and get out. That's very that's very important. Another one, PL, flat base breakout here. You can see suddenly earnings come out, good earnings. You get this green candle, you get the highest volume of the quarter, and again, riding the 10-day. That's what the strong stocks do, guys. They ride the 10-day. They don't get below it. Plug, another one that's really had a nice run here. Also, descending trend line. You can see how it just can't get above it, and then suddenly it starts riding the 10-day. The 10-day crosses the 20-day. You get above average volume, and you get the green candle, green candle, green candle, green candle, green candle, green candle, and it starts squeezing. And again, guys, look at this. It doesn't close below the 10-day. It tests it a few times, and then there it goes again. That's what strong stocks do. They stay above the 10-day. They go real hard, then they pull back into it, or they go sideways. And once they relax a little bit there, take their breath, they go for another run. As you can see here, nice run. Few sessions later, it's almost doubled. And again, you can here start to manage risk here, because you start seeing these bigger red candles telling you that the inertia might have been gone here. Especially here, you can tell that also the 10 and 20 day. The 10 day is descending here, as you can tell. That's a sign that maybe things are not as good anymore. Certainly not trending upwards as strongly by definition. Let's look at another one. Another flat base breakout. Earnings on this day here. The day after. Highest volume of the year, guys. Big breakout. Very nice conviction on this breakout here. Again, look at the 10 day, guys. I mean, I can't stress this enough, how important this is. Look at how it trends. It's literally surfing the 10 day, guys. Look at it. And then starts closing below the 10 day here. And it doesn't close below it here. Look how it recuperates. Look. And then suddenly it starts closing below it. You get these red candles. It will close below it. And that's our exit trigger. And guess what? It hasn't done anything since. So what we just want to do is we want to be in the strongest part of the move here and let the 10 and 20 day guide you. As trading legend Christian Kolomagi, who's made like more than 100 million of profits throughout the years, as said, don't think you're smarter than a 10 and 20 day. These are truly magic lines, as he puts it. So that's super important, guys. You want a stock that's setting up, and you want to buy it as it breaks out, and then manage your risk and ride the wave for these 10 and 20 days. Simplicity, and it works. That's all you need, really. You don't need those Ishimoku clouds or the mark indicators or anything else. Just keep it to the essence. Master the essentials, the basics, and do them very, very well. Let's look at another one. Another flat base breakout here. As you can see here, highest volume ever, followed a couple of days later by the highest volume ever again. And you can tell here, guys, look at this. The 10 day, and then even when it closes below it, 20 day comes to save. This is what strong stocks do. They get a little bit overextended, they pull back into the 10 day, they rally again, they get a little bit overextended, they pull back into the 10 and 20 day, they rally again, they pull back into the 10 and 20 day, and then here you can tell that it's starting to fade. You can tell, especially, this one is a warning, but certainly this one, that's a big one. You just want to be getting out when this starts to develop. You can tell that it's getting tired here. So let's look at some charts here real quick before I end the video. Things that you just don't want to be trading, because there are many tickers out there, many companies, and most of them don't offer a signal. So don't be like confused by all the clutter that's out there. Look at this. There's not really a signal here. This is not like the market you want to be involved in, right? So this kind of stuff, just stay away from it. There's no real trend. There's no edge. There's no nothing. Here's another one. It's pretty much exactly where it was at the beginning of the year, guys. This is not the trending. These are not the trending stocks that we want to find and that we want to play. So just because there's something to trade doesn't mean that you should be trading it. Be more selective. Don't start seeing these mirages, getting all excited. Oh, maybe this is something, or maybe this is something. This might work. We want to be having an edge, and we want to, be selective. Here's another one. Absolute clutter, confusion. This is just not good. This is not something you want to be trading. It hasn't gone anywhere. It's probably not going to go anywhere either for quite some time. Yeah, this is just clutter, guys. This is what you want to steer away from. You want clarity. You want that price to tell you, scream at you that it's going to break out, and this is not it. So now you've had some nice examples as to what the breakouts that we'll be looking at, that we'll be searching for, and a few examples as, yeah, this type of stuff that you just don't want to be trading. So I hope that helps. I hope that clarifies a few things on what you can expect from Breakout Sniper. And I want to thank you for watching the video. And if there are any questions, do let me know at support@breakoutsniper.world. Be sure to subscribe for more videos. Check out our website, breakoutsniper.world. We run a Discord server. We'll be opening up the premium tier soon. It's a cheap service, guys. It's quality, of course, but my competitors, they ask like 60, 70, even $100 a month. So far, our starting tier premium is $20 a month. So we'll be delivering you great breakouts at a very competitive price. So yeah, again, thanks for watching, and I'll be keeping you updated. Thank you.